But the number one thing was to end the convertibility of the dollar into gold. But
Yeah.
this was designed to head off a crisis, head off a run on the bank, essentially, which could have been a much bigger problem. I think what's going on today is also intended to try and head off a crisis. We've had Paul Tudor Jones, Stan Druckenmiller, um, uh, Bill Dudley, former head of the New York Fed. We've had Ray Dalio for years. And these voices have grown a lot louder in the last 12 months, suggesting that we're headed for a debt crisis.
Hmm.
The interest expense on the debt is growing rapidly. At the same time, the debt itself is growing rapidly. And we're potentially getting to a point where there's a supply and demand mismatch in the treasury market. So if you are, and Scott Bessent probably understands this as a close associate of Stan Druckenmiller, probably understands this better than better than most.
Yeah, and he
Um,
does articulate it. I think you even said earlier when he was confirmed, he talked about this, but
yeah,
he's out there almost every day, and very often sort of starts his answers with, "Hey, look, if we don't do all this stuff, we're going to be running headlong into this debt crisis."
yeah. And what would a debt crisis look like? Well, supply explodes, and at the time when demand is waning, and we're seeing that foreign demand for treasuries has been waning for some time. And we're seeing, the issuance of debt grow rapidly with increased interest expense. And I think this is one of the other reasons why they've said we're targeting the bond market. We need lower interest rates. We have to do whatever it takes to get lower interest rates right now and get the Fed to pivot back to quantitative easing because we literally cannot fund the government at the trajectory that we're heading right now. So I think a lot of this is not intended just to pass the tax cut, but it's also to potentially try and head off, a very similar situation as we saw in 1971, which was a run on the bank. This is not necessarily a run on the bank, but it's potentially a situation where the supply and demand dynamic for treasuries could get out of hand pretty easily. And so, how do you get ahead of that? Well, you have to make sure you lower interest rates, however you can. So, slowing the economy dramatically and getting the Fed demand.